Today is Tuesday, 3 p.m. is our time to share knowledge. Today we are going to talk about company car. Benefit and taxes related to company car is very much related to earlier, and we had a session where we talk about asset, like the year-end tax treatment. One of the things is the buying asset, right? Buying car. So buying car is greater than 6,000 pounds or less. And you can check into our YouTube channel and to get that information. So let me direct you to our website first. This is where you can find time on my calendar to have appointment with me. And remember, I have these books I'm writing, an appointment with Ying at 8 a.m. and also appointment with Ying at 10 a.m. Both of these books are already on Amazon. You can purchase, and I am working on 2 p.m. and 6 p.m., which is really laid out. My appointment book really lays out the development of business. You start, you grow, you expand, and you retire. So those are the 4 books we're talking about to do. I am actually wanting you to see the appointment button here. You can actually make an appointment with me. And right here, you will see what time I'm available, the date I'm available. With that, and we can further talk about our YouTube channel. You know, like I said, we're trying to make sure that you get hold of the knowledge we share, even if you know, you don't have time today, right now, at this moment, and you actually can come back to recollect what we have talked about and to see what we were saying. And today we are focusing on cars, company cars. You know, as a business owner, one of the perks we have is that you could have the company buy a car, you drive it. Okay, so that is why we call it company car. So you buy the company, the car is titled under you, under your company, and then you or your key employees or you or your significant of employees can drive it, right? So that is our today's coverage, and this is quickly about me. And I am the CEO and managing partner for Community CPA, and you are with me right now. And we have, you know, in our firm collectively, we speak 10 different languages, and we have more than 10,000 clients to serve. And this is a regional firm. We cover California, Iowa, and Minnesota. You're probably wondering why in this state. We are working on expanding to other states as well. We're following our client footsteps. So if we have a lot of clients from certain areas, that's where we go to set up a branch. So that tells you why we are kind of random. It's not random, it's just because we have more clients from these states. And you see, you can go to, you know, I mentioned here that you can go to our website to book an appointment with me. I also served on the National Taxpayer Advocacy Panel. This is the federal advisory committee that providing advices to IRS. So I was on that panel for 3 years. Give you a little bit of bragging point so you know who I am. And here is the 8 a.m. book that I wrote, already published. And this is our second book, already published, so you can find me on the internet. And no responsibility disclaimer as usual. Just make sure that you take knowledge really carefully. And there's so much knowledge out on the internet. So my recommendation is that you stick with key sources. So for example, I stick with irs.gov. Anything I need, I go to the irs.gov for answers, or I go to the state government site for answers. Even those government sites, I'm telling you, when new things come out, they don't have guidance. They're not like that quick and like you can find everything. So a lot of it is also related to our experience. So communitycpa.com is a reliable website. You can rely on us. And as long as, you know, it's a free service right now, if you want us to help you to secure your fortune, and then you engage us, right? All right. Benefit of a company car. Are you kidding? If you have a company car, of course you have benefit. So small business owners can spend company money to buy a car for business use. So for example, right now we're doing tax planning for many companies. If one of the company come around goes, I want to buy a car, is it possible? Absolutely. Company can pay money out to the car dealership, buy a nice car for the employee or for the owner employee or just for the owner, right? So tax deduction, it is tax deduction for your business. So if you file your business tax return, and it can come on your tax return as a deduction. You can write off so many things. When you buy company car, when you buy a car under the company, you write off your insurance, your car wash, your car gas, your repair, your tag fees, and your decals inside of your car. I know some business owners like to wrap the car up and for the company name. Of course you can write it off, but the reality is that one of my clients and actually bought a company car, but did not have any signs on the car. So I asked him, I said, this car is paid by the company, but you didn't really have any sign on the car, and why not just have a sign? He goes, I am such a bad driver. I don't want people to swear at me and then, knows that is my company doing it. So they're not doing it. And that's so understanding, right? So understanding. So there's a lot of company cars out there on the street. You don't see the company logos or name on it. That's totally okay. That doesn't mean that it is not a company car. It is still a company car, and you just need to know what kind of things you want to put on the car, right? But of course, when you have a company car, you drive it for personal reasons or purposes, then fringe benefit rule applies. So let's talk about that. What is fringe benefit? How that is being taxed, right? So example of company car. A company decided to buy a car for the owner employee. So if you own the company, you also pay yourself W-2. So they're buying it for you, right? Because you need the car to visit customers and the satellite offices, check on suppliers, meet with vendors. So good use. And you expected to show up nicely, so driving a nice car. So the company buy a luxury sedan. That's totally understandable. You don't want your company to show up on the client's parking lot. They think you're driving something and needing to repair, right? So understandable, so you can do that. The entire car is company asset. So that's what you need to keep in mind. That's your company asset. Just like is your company computer, belongs to your company. So let's say in this example, we say that this car was driven 8,500 miles for business, but 7,000 miles for personal. So add together, so the personal ratio is 45% of the company, 45% usage is for personal, 55% for the company. So now, how do you apply for the fringe benefit side of it? So as a person, because you're the one driving it, so what you need to do is you need to look at your total cost for the car and times 45%. So you got hold a number, right? That number need to be reported as your other income on your tax return. So you would need to pay taxes for it. So let's take a look at how that works. So in this example, we're saying that 45% of the uses is personal, right? Let's say that represents $10,000. Like the other $11,000 is company use. So $10,000 represents the 45% of your in this one is 10,000. Take it back. I'm talking too quickly. So the total cost of the car at your company is 10,000. Okay, I made up this number because I wanted the math to be simple. I'm not a mathematician, okay? But we literally have two mathematicians in our firm. They're brilliant. I think mathematicians is the best accountant ever. So with that said, this is a $10,000 total expenses for the car, for the company use. 45% of that is for personal. So we take 45% times 10,000, that's a 4,500. So let's say I am the owner, so I used it for 45%. So I'll take the 4,500 into my personal tax return, treat that as other income. So my tax rate is 20%, let's say. So I pay $900 out of pocket for using company provided car for everything I do. Do you think that's a good deal? Of course it's a good deal. You didn't even pay gas. You just paid $900. So all you paid it is the tax amount on that 45%. So if the owner employee bought the car to drive, he or she would pay out of pocket for the entire purchase cost of the car. Then the personal use is treated as a fringe benefit income. So, the owner employee, if they buy a car on their own, they're saying that, no, I'm not letting company buy it. I buy it of my own. If they do that, and you can imagine that all these deductions we were talking about earlier, it would not come in for your business deduction. Am I right? Because it's not a company car, because your owner paid it on their own. But if they drive the business miles, let's say 55% was used for business, then the owner has options. They can claim mileage to get reimbursement back from the company, or they can reimburse themselves back for actual business-related expense, right? So just now you kind of understand when we talk about company cars, and one is company money, company bought it, you use it, then you report the personal use as a fringe benefit. Or the other way is you bought the car, but you use for business, then you would need to go through the mileage deduction, actual expense, like what, on our webinars, we talked about that as well. You can actually search our webinar library, just put in car deduction, it will all come up. All right, so tax treatment of company car. For tax purposes, the company treats the car just like any other business asset. So subject to depreciation deduction, and if the car is purchased, right? And even if the company borrow money to buy the car still can be deducted, and it just company has the liability. Out-of-pocket expenses related to the car, including insurance, gas, oil, maintenance, are all deductible. They're all deductible. And even if you're using the car for personal, remember, you just calculate at the end knowing what percentage is personal use. But in the process of the year, everything is paid out of the company. If the corporation financed the car, in this case you borrow money to buy the car, the interest it pays on the loan is also deductible. With that said, to purchase car by the company has no effect, okay? If you borrow money to buy a car and you made late payment, the dealership don't like it, and your credit going down, but that's not really your credit. It has no effect on your owner's credit rating because it's a company car. But of course, you may say that, well, Ying, I just bought a car. I put it under company name, but the dealership told me that I cannot do that because my company is too new. So I have to put my name on there too. So the car title had the company name under my name, and I actually borrowed the loan. I did a personal guarantee. So if that is your situation, then obviously if you don't pay down the loan, it's affecting your personal credit rating because you personally guaranteed it, right? But in terms of the accounting treatment, then that car is company car. So you can still depreciate it, you can still deduct the insurance, gas, and whatever we were talking about earlier. But at the end of the year, you need to know just the amount of personal use. Then you can reimburse that back to the company and take that income over to yourself as the as a fringe benefit, so you pay income tax on it. All right, so tax treatment of personal financing. So on the other hand, if the owner employee, if you buys the car but you are buys the car you're personally, you won't be entitled to all these deductions, right? So outlays for the business related portion of driving are unreimbursed employee and business expenses. So basically, if you are having your own car and you drive for your business, so you need to keep a good track record of what you drive for. If you're doing the mileage reimbursement, you need the 5 item. Remember, we talk about these 5 item all the time. Number 1 is the date you drive. You're driving from what address to what address, total mileage, and a purpose. So these 5 items need to be documented so that way you can get reimbursed from the business, so your business will book that as a business expense, right? Right now, let's say if you know how the IRS has a mileage rate of 0.60 cents per mile, but let's say if your company only reimburses you for 25 cents a mile, you have this difference, you don't get reimbursed, right? So the Job Act President Trump put out had already terminated that claim for you, so nobody can claim anymore until 2025. So hopefully by the time 2025 comes, the Schedule A item, there's a lot of them can come back because it's really not fair. I think it was a very bad job at the federal side, and the President Trump had did something really terrible there, in my opinion, because he doesn't use it. That's why he moved to Florida. But people who are in Iowa, we're still paying state taxes. We don't like what he did on the Schedule A. And anyway, so just to tell you that you are at loss when you do that. So it is really, if you're the owner of the company, why are you not buying the car under company? Why are you doing it personally? That puzzles me because it really is not beneficial for you. If the last bullet point here says that if the owner finances the car personally, the interest payments are non-deductible. It just says that if it is your own car, you finance it personally, so everything is on your personal side. It's not related to the business deduction. What you need to deduct is just a reimbursement request on the mileage or actual expenses, but the finance is not part of the actual expenses. So that's what it says. So just give you a pretty clear picture of what you're gonna do, right, if you are a business owner. So careful bookkeeping is essential. It is truly essential. I like to consider bookkeeping is almost like a life habit. You see some people, you walk into their house, it's kind of messy. So that's their life habit. They're just messy. But you also going into some places, they're just clean. Even in our firm, some of our staff, if you look at their desks, they're so organized. They even have little bow ties on little things, and stuff are so well enjoyed. But you also can see some people's desk is kind of piled with papers and it's just very disorganized. It's just personality, right? Bookkeeping is the same thing. Bookkeeping of your tax deductions, it is not like IRS is on your back, you don't do, they kill you. It's not even that, because not everybody get audited. Some people, messy, they get away, right? But bookkeeping is essential because it's part of life habit. I would really encourage you that to consciously realize it is a habit. So you can form a good habit. And if you can do that from little things and, having the books and record ready for your tax preparer at the end of the year, coming in with organized documentation, that's such a great life, a life habit to have. And you would not worry about being audited because you have everything documented. Why would you worry, right? Personal use need to be tracked and valued under the fringe benefit tax rules and treated as income. So, when you put the car under the company, you use it for personal, then that need to be tracked and valued. You cannot say that, I drove for a couple thousand miles, but it's only $1 worth. That's not a good way to do it. And you actually should use the IRS rate to reimburse the company. That's what we normally tell folks, that's the easiest way to do. Just use IRS rate to reimburse the company. But the reality is, as a business owner, when you reimburse mileage to employee, you don't have to go with IRS rate. That is the highest rate. You could go lower. And that is something that is not talked more frequently enough, that small business owners kind of tied up with this IRS rate. I can't afford it. Just can't afford it. Of course you can't afford it because you are using IRS rate. You can cut that down to make it affordable for yourself, right? So, in the end, you may ask, is a company car worth it? And the answer is absolutely worth it. So, despite the necessary valuation paperwork, and a company-wide car is still a valuable fringe benefit for business owner and key employees. Can provide them with the value, with the use of the vehicle at the low tax cost. They got $4,500 worth of fringe benefit, but paying $900 taxes. That's all they pay. So that's all out of the pocket. So it is pretty worth it. And then you may even be able to transfer the vehicle to the employee when you are ready to dispose it. Of course, when you dispose a company car, and there's a Kelly book value, right? You should look at that, and depends on the value, you can sell them for the lowest value. And so, long time ago we had an audit, and both owners moved the car to their personal, sell the car from the company car to their personal. So the value they used was a Kelly Books value. So when the audit comes and they're asking, hey, how did you decide this car only worth $13,000? So, the owner can pull out the Kelly Book value. Here you go. This is how we sold our car. Perfect. So they gone through that without issue, because that is appropriate way to evaluate the car, right? And we can help you to stay in compliance with the rules and regulations related to this fringe benefit side. But we want to encourage our small business owners to look at purchasing vehicle under the company name, because all of these benefits we now talk about, it's just worth it. All right, and this is our day for what we are sharing. I hope you got one or two tips and the best practices out of this talk. And email Catherine at communitycpa.com for your interesting topics. And you can call us at 515-288-3188. This is our main number, and we open Monday to Saturday, 6 days a week from 8:30 to 5:30. So I'll see you again.